Well, good afternoon.
Hello,
This is
Dan.
Dan this is Dan with Chris Campbell of Change Mortgage, and we're going to talk about a really unique mortgage product for folks that might have trouble qualifying otherwise. And it came to my attention this Chris works with Change Mortgage, and out of Southern California, and we're going to talk about personal bank statement loans to help folks get a loan that they're looking for if they don't otherwise qualify due to their employment situations, things like that. They might have very unique employment that doesn't always sit into a box. So I wanted to uh, turn the floor over to Chris and hang on. Explain the program.
Okay. Actually, there are a couple programs I wanted to highlight or have this opportunity to highlight. One of which, of course, is the use of bank statements in lieu of what would normally be the full doc loan of, tax returns or W-2s and pay stubs. So we've got a couple of those that are very, very useful and very, very popular. And we'll talk about those in a little bit. Change Lending, which of course is the parent company, or Change Home Mortgage, which is our parent company of Change Wholesale. That's our company name. It's out there. If we go into the next slide, I can give you a little highlight of where we are and where we've been. Company founded in 1994, a couple name changes along the way until finally we settled on Change Wholesale. We can go to the next slide. The big deal over here at Change Lending is the designation we have from the Department of the Treasury, the CDFI, Community Development Financial Institutions Fund. Big name, essentially, by getting this designation, not easy to get. We have to meet several requirements to make sure that we do qualify and keep it. So that is certainly out there. The benefit of having this designation is that we are not held to the ability to repay rule. That's an important feature for qualified mortgages, certainly, making sure the borrower can make that payment. We have used this designation on our own non-QM products. These are our products only, where we don't have to follow that rule. And we put in other safeguards, to make sure borrowers are in fact aware of the payment. So, they know what they're getting into. That's very important to do. This is the tool we have available to us that has certainly opened up the doors to a lot of borrowers who frankly wouldn't be eligible to get a loan anywhere. And as we move forward, I'll be able to highlight why that is. So if you want to go to the next slide, we are this country's #1 non-QM lender by, I think, a long shot. And what, of course, we're focused on are addressing the needs of people who don't fit in that regular box of full doc. There's a lot of people that are in that box. A lot of people who are self-employed, write everything off, irregular employment for whatever reason, people who are retired. Things like that. A lot of real estate investors we have, people that have quit their job and are moving. That happens a lot. Quit their job and they're moving, and wherever they're going, they want to buy a new house. And without a job, and certainly without income, you'd never be able to get a loan. But we do have a program that will fit for them. So these are the kind of situations that can come up. Another big trigger, for whatever reason, is someone who changes the type of income they're getting, going from like a W-2 to a 1099. That seems to be a big trigger for people to start, seriously thinking about buying a home. And I'll show you on the next slide what we're talking about. This is the program that we have that is the most popular by far. We call it the community program. It's really, in concept, very simple. There is no income and there is no employment. So there's no qualifying with the debt to income ratio. So where does it go to? How do we make sure this is a good loan and it performs well for both us and the borrower? It's all about the assets. It really becomes strong about the assets. For example, At the highest FICO score requirement of 740, it's 20% down and 12 months of the mortgage payment post close. That is, they have available in their savings when we close the loan, they have a way to make those payments. So that's how we ensure the viability of the program. It doesn't, you don't need to have a 740. It does go down to a 680 with a reduction in loan to value and an increase in the reserve requirement. So that's what this loan does. It is very, very popular for obvious reasons. It's not necessarily meant to be your forever loan because the interest rates are correspondingly higher than what you would be getting with a Fannie Mae or an FHA loan because interest rates are a reflection of risk. And we are selling these loans in bundles on a secondary market. And these are the requirements we do. And it's, like I said, very popular. Dan, did you have any questions on that program?
At this point, no questions right now. It's really compelling.
Right, it is. And like I said, it's very, very popular. This is for primary residences and second homes only. So, this is what it's meant for. And like I said, we do a lot of business on this program. This program does allow also just the most recent bank statement, not 60 days or more, just the most recent bank statement. Gift funds, for example, can be used for the entire down payment and closing costs. But so long as the loan reserves, they're in. So you can see we're trying to make this as open and inclusive as we possibly can. And so these are some of the features within the program that are very helpful.
So you mentioned retirees earlier.
Mm-hmm.
And so this, I'm just thinking logically, it would make a lot of sense for a retiree maybe that's downsizing, selling their current home, has a lot of funds, profits and such from the sale of their home, but maybe they don't have a job. They're retired.
Right, exactly.
Living on fixed income, basically.
Right, exactly. And it works really well for that kind of person because you're right. And I see this all the time. Someone sells from wherever they're living, moving to wherever they want to retire. They sell their house and will close either because they have the money or the loan or it's in process of being sold as we do our loan. They're selling their home and then the funds become available and we close. Easy. Do that all the time.
Cool.
Yeah.
Cool. Let's move to the next slide. Here we go.
Mm-hmm. So this, just to give you a little more technical info on the program itself, this is what we call the matrix. It gives you the information. So what FICO score do you have? What is the down payment needed and what is the number of months reserves? And then there's a little bit more information in there about property types. What I particularly like, because this is who I am, this is what I did, this is how I live. I have a 3-unit property. And there is no change to the program. There is no reduction in loan to value like you would see with Fannie Mae. It's just, if you got a 740, it's 80%. You got a 1 to 4 unit. It's the same, no hit to pricing. And it works really well for that type of person who's looking to buy units as a primary residence. There is a hit if it's a condo for this program, 70%, 30% down minimum for a condo. So there's a little twist on that. Okay. Any questions on that?
No. So it looks like as long as you have a good FICO score, you're in good shape with your credit and you've got sufficient down payments and reserves, you're in.
Exactly. And we try to keep it as simple as possible. And it is, but we definitely look at those assets to make sure that, the borrower is stable. They do have them. And it works out. Yeah.
Cool.
And this information here on all of our programs, rate sheets, even, we don't hide anything. You can just go to changewholesale.com. You can see our program guidelines. I'm looking at it over here on the other screen. We have information, rate sheets. We even have our little quick pricer tool to, do a loan scenario if you like. That I would always, probably a better idea to talk to your loan officer about that. They can give you a greater insight into how that works and what it means.
Gotcha. Mm-hmm. Gotcha. So moving along.
Yeah. So the alternative
alternative documentation. which is totally cool.
Correct. So once again, another feature of non-QM, non-qualified mortgage. Qualified, you need full doc, W-2s and pay stubs. Alt doc, alternative documentation, means we're using something to derive an income. And for us, you got the different options of like last year's 1099, maybe last year's W-2, last year's tax return only. Instead of 2 years, it's 1 year. By far the most popular is the 12 months bank statements, either personal or business. So either or, whatever works. And with the business bank statements, we assume an expense ratio for the business is 50%, unless your CPA says it's less. And then it's really just how much is being deposited into the account every month. How much is that? Total it up, average it over 12 months. That's a little simplistic description of that. But then that becomes your income. Very simple. It is exactly like that. Here at Change Wholesale, we have a little twist, and it's wonderful for personal bank statements. And this is also available to us because of our CDFI designation. On our personal bank statement program, there is no employment needed. It is blank. So it is literally anybody doing anything. I've had realtors use this program because maybe they just have the one bank account, right? And they just put everything in there. Or they have maybe one account, I don't know, is designated as the business, and that's where the money goes, but it's a personal statement. And all we see is a personal bank account with the deposits, and whatever that is, 100% of those deposits, because of course there is no business associated with it. So it's 100% of the deposits. So it's really quite that simple. And we do have a group inside my office that will do the analysis for you or any broker who wants to use that service, so we can derive an income based on that. The other part that I really like on our personal bank statement program or any bank statement program, we only require the first page of the bank statement to do the income analysis. The one with the summary on it. Sometimes the summary is on the second page, but you get the idea. So long as we have that summary, we will start at that point and do an analysis. Now, inevitably, the analysis process reveals that we're going to require some full bank statements, but it's never more than three or four. So that's a way to hide some of the deposits that are clearly not related to any kind of income, like an IRS refund, which is, that's not repeated, or maybe transfers in. Those are the kind of deposits that would normally be plucked out. But if we're only using the first page, we don't see them. They stay in, except for those few bank statements. We might see all of it. But beyond that, it's whatever the deposits are. Now, the key here is that the borrower is still qualifying. So there is a debt to income ratio calculated, but that can go up to 50%.
Wow. Wow, that's very flexible.
Exactly. And it's meant to be flexible because it addresses the needs of those borrowers that do not qualify in the traditional sense. So once again, we start at 20% down, which is a bit of a challenge for some people, but there are ways to use gift funds, a gift of equity on this program that can be very helpful.
Cool.
Any questions on that?
Let's see here. I moved too slowly to the next slide because you talked about the 12 months.
Well, I think I covered this okay, and I think you get the idea. Yeah. And I think as we go through this, the idea of what we're doing is really what I want to convey. And then, of course, the more detailed questions your borrower can ask you. You can go over it together and work through what that is so that you can put together a loan program that actually works for them.
Right.
Mm-hmm.
Right. And another matrix there for the last program you just mentioned.
Correct. So get a little bit more detail on what we're doing.
And then let's go to the 4 national program. That is really an exciting program. And especially, and I know it's a big deal down in Southern California where you're at. It's a big deal up here in Seattle as well. So I was hoping maybe you can go into maybe a little bit of those details.
Yeah, it's kind of odd that here we are giving loans to people who are not citizens. But this, of course, is a program that we can offer to foreign nationals who live in another country and buying an investment property. It has to be an investment property. And they do have to live in another country. That's going to be on the application. So that's what it's for. And the reason they have to be living in another country is because this is not meant to be their primary residence. Someone who's living here as a foreign national doesn't have a visa, and eventually they will be required to leave the country and go back. And of course, we don't want to have a vacant property that is then, going to possibly be our problem. So that's what this is meant to provide. 70% loan to value, 30% down. Here's the key. A foreign national probably doesn't have a Social Security card, although there are some situations where they do. So they probably don't have a Social Security number. That means no credit. So this program addresses that. They don't need any credit. They don't need a FICO score. It's not meant for that. A trade line, what do we normally use? No longer applies. It's just a letter from, whatever bank they're using in this country to hold the money for the transaction. And that's it. That's their credit. So it's kind of interesting. We do require whatever money is being used to buy the property plus the reserves be in a U.S. bank for at least 30 days. So I have people, they open escrow. They don't have any money here. They open an account in a U.S. bank, which I have now learned is actually very easy to do. And then they just move the money into that account while we're doing the loan. And we close 31 days later because it has to be in the bank here for 30 days. And that's how we do it.
So just 30 days seasoning on the new account. That's it.
That's it. I don't want, their foreign bank statement or whatever. It just arrives in the U.S. and, someone wants, don't you want that foreign bank statement?
No.
The statement is, are we going to be able to read it? So, yes. Why do that? So this is a way to make it easier for that whole process. And it does.
Cool.
So that's an interesting program.
And let's see here. We'll move on to, let's see here, borrowing incentives for community development borrowers.
Right. The Community Development Financial Institutions Fund. So we got the designation, and the Department of the Treasury, has said essentially, okay, so you got it. We gave it to you. How are you going to address the needs of the low to moderate income borrower, those demographics, which have a smaller percentage of home ownership, which this program is meant to provide? How are you going to market to them? How are you going to incentivize this program so you work towards that goal of helping certain people in certain income levels or demographics? And the one way that we have been able to do this is for those demographics, Hispanic and African American, is to give them a credit that's equal to the underwriting or admin fee that we charge. To do the loan, we have a fee of $17.95. So we turn around and give them a credit that offsets that. We can't delete it because there is a fee there, and that's legal reasons. But we can provide a credit that offsets that. So that's a small incentive that we're able to provide to those borrowers who are having a tougher time in the general market in getting into their home. Cool. And that's how this is meant to address that, to help that.
And it works nicely.
Yeah, it works wonderfully. And that's what we're doing.
And then if anyone wants to reach you directly, here's your contact information, and we'll keep that in the description box. And then, of course, they can contact me as well. And we work closely with Change Wholesale. Next Mortgage is
Totem Lake West Storage.
Whoops. There we go. We work closely with Change Wholesale, and Chris is an awesome guy. So you're in good hands either with myself or with Chris, and we're definitely here to help.
Absolutely, and I appreciate the opportunity. I went over this rather quickly. Certainly, anybody who has any questions can contact you, and then of course, with the programs that we have available can certainly help people target the needs they have, and to emphasize the strengths other people have in order to fit into the right program that offers the best rate. Best obviously meaning lower or lowest possible, I think, is most often true, because you don't want to necessarily take, whatever the first offer is, but you can help them determine what is the best option for them. And I think that's very important.
Cool.
Mhm.
Chris, thank you so much for coming on today. I really appreciate it. It
All right.
was
Well, thank
great
you.
talking to you. Thank you very, very much. Hang on for just a moment, Chris.
Okay.
And
Thanks so much.